The broadcast is now starting. All attendees are in listen-only mode.
This is Christine Langley with the Wyoming Women's Business Center, and I want to welcome you to important miscellaneous reports inside QuickBooks. The Wyoming Women's Business Center is a nonprofit organization that helps people who want to start or expand small businesses specifically in the state of Wyoming. And we do that through three distinct programs. The first is business training and one-on-one counseling. The next is through access to capital using our microloan program or our individual development accounts programs. And then lastly, we have a professional artist development center. So this QuickBooks training series is brought to you by our microloan program, which was started to provide access to funds for those unable to get business loans through traditional means. So if you'd like more information on our microloan program, please contact Waldo Smith. And so for our presentation today, I'd like to turn it over to Cade Reynolds with Capital Clarity Company. Welcome, Cade.
Thanks, Christine. So, as Christine mentioned, we're going to be talking about important miscellaneous reports. As you probably spent a lot of time at this point in time understanding your QuickBooks, putting in all the effort to get the bookkeeping done, and now it's important to look at some reports. We talked in a couple other videos about the balance sheet and the profit and loss. Those are, I would say, the most important reports, but I think these three that we're going to touch base on here in this video are very important as well, and I think that they help you make better business decisions. So with that, I want to kind of go forward and talk about three different reports. So accounts receivable aging. So that's kind of going to give you a detail of who owes you and how much they owe you, and then a timeline of how long it's been owed to you. Accounts payable aging is the complete opposite of the accounts receivable aging, and it's who does this business owe money to? How long has this bill's been outstanding? And it kind of gives that perspective there. Statement of cash flows kind of shows you where cash is going, where cash is coming from, because the profit and loss statement, that this takes care of all the activity from the actual day-to-day income and expenses. But a lot of times clients, I find, have activity that's reflected on their balance sheet. So the cash flow statement takes all that and puts it together with the profit and loss and gives you a pretty useful report. So with that, we're gonna jump over into QuickBooks Desktop and take a look in here at these reports. So up here at the top, you just go to reports, and then to start off, we're going to talk about the accounts receivable aging report. So in this, I would start off, and I usually kind of look at it and say, as a business owner, I always look at it and I say, what is overdue first? That's usually or what is my total due? Kind of look at that. So this fictitious business here has $45,000 due. Of that, what is overdue? So we have the 1 to 30 days column, 31 to 60, 61 to 90, and over 90. So in this example, Adam's Candy Shop hasn't paid us for $3,900 of candy, or of our services that we provided to them since over 90 days ago. So my question at that point would be, why is that? So you might want to drill in at that point in time, and you would say, man, that invoice is old. Or maybe right away you say, man, we'd already received that. Maybe we didn't get the payment applied correctly to this. So it just brings up questions as you drill in and look at these. So I think that's why it's an important report. And also you want to make sure you're collecting as soon as you can. So like these really old collections, like Adam's Candy Shop here, that's not good for the business health, because you're floating the cash for them. So that's the more current this stays, the better off you are. So that's kind of to that side of it. Now we're going to jump over to QuickBooks Online and look at the same report here, and from a different perspective with one with error, and I'll kind of show you where the error happened. So inside it, we're going to go down to reports, and then we would do the accounts receivable aging report. In that, we're going to look at it and we're going to see last month. Just 1 second. There we are. And we're going to see that we have a client with a credit balance here. So this means she paid us too much. So my question at that point in time would be, why is that? So I would, with that, any opposite signs in this report, I think it's important to look at. You would go in and you would look at it and you would say, payment $559, but it gave us a $320 credit. So what happened with that? So you might drill in even further and then see that the original invoice was for $239, and she wrote us a $559 for a check. So with that, I don't know the answer in this one. It could be she overpaid us because she wasn't going to pay us for a while. That's a possibility. Could be that it entered wrong. You would hopefully find that one on your bank reconciliations. But that's kind of something you would just want to look at high level. Anything that has a weird sign that way. The other reports, and you would find these in the same thing in QuickBooks Desktop, but the other important reports to look at are the accounts payable aging summary. So in this scenario, we're getting some that are getting older, but at this point in time, this is saying that we overpaid this insurance agency. So when I pull that report as of last month, just so we can look at it that way, it looks normal. But then if I pull it as of, there's nothing that's really outstanding. We have a $241 bill to them. We have some other bills, not a lot going on. Everything, I would probably question why this one is 31 to 60 days overdue. Probably same with the 1 to 30. But at that point in time, maybe that's the terms of those two. But if we do this month in this report, you would look at this and I would say, man, why did we overpay these guys so much? And so I might drill in and I might say, so we definitely had an overpayment. And then I would question, why is that again? And you can always drill in further and look at these even further. And at that point in time, the bill, we definitely applied that payment there. Maybe I entered it wrong. Maybe, it just depends on the scenario. There's always a different answer to it, but it's important to investigate those and why they're that way and why they haven't went away. The other reports that it's super similar as well that we're going to talk about in between the two, desktop version and online version, is the statement of cash flows. So the statement of cash flows, as I mentioned, was kind of a blend of what's going on in the income statement and what's going on in the profit and loss statement. The balance sheet, sorry. So I'm going to pull this report by last month. So the last month we showed profit and loss of a loss of $3,800 here. With that, we have three major categories on this report. So operating activities, that's anything that you did to finance the business for operations. So you might have borrowed against the line of credit. You might have an increase in AR, or you might be borrowed heavier on your accounts payable side. So that's that side of that there. Or my credit card balance might have went up. The other side of this is investing activities. So maybe we were forking out a bunch of cash at that point in time to buy new equipment. So we bought a new truck this month, it looks like, for $13,000. And then financing activities. Where did we get any additional cash into the business? In this scenario here, we have a note payable that we financed, so that's an increase to cash because we took out a note, but we'll have to pay that cash back at a later date. And then we have an additional activity that's stemmed from this truck, the way it was financed through owner contribution. So that kind of gives you a high level of what this report is showing you. I think it's an important one because it kind of shows that increase in cash, we decreased our cash balance for this period. After everything was said and done, we had a decrease to cash, and now we're sitting at a negative cash balance. So that's why the statement of cash flows is useful, and I hope that's useful information for you as you start to look at this on a more regular basis and understand what it's doing. So with that, I'm going to turn it back over to Christine.
All right, thanks, Kate. So the Wyoming Women's Business Center is made possible through several different partnership agencies, but our primary funding comes from the U.S. Small Business Administration and the Wyoming Business Council. And so we thank them and our other funders for their support. If you have questions and you'd like to contact the Wyoming Women's Business Center, this contact information is on your screen for all of our business counselors. And of course, our business counseling is always free. If you are interested specifically in the microloan program, again, please contact Waldo Smith. And thanks everybody for joining us today.